Good evening on the shock and awe day of Wednesday, 10th of August, 2022, 6:15 p.m. So we see a day where I had given my traders parameters between a 9% CPI down to an 8.5. And I broke it down into 5 zones, well, actually 3 zones of those numbers, down to 8.5, bullish, stock market rally, above 9, bearish, stock market break. Pretty much what occurred. Now, the question is, does it have legs from here? People jumped in, and I don't think that makes sense. So if you want to buy it up here, congratulations. Not with my money. It's where you're coming out against upper Bollinger Bands across the board. Metal markets. Saw Goldman tonight lowered its projection for this year from $2,500 an ounce gold to $1,960. Silver market down quite a bit too. So what they're probably seeing is the headwind of strong dollar ultimately. Dollar got smashed today. I call 117 points a big break. Why? Traders are going to look at the Fed, and from everything I see, the Fed's not going to back off. Now, let's define back off. Not 100 basis point off this report. That isn't going to happen. No need for an emergency meeting. And now you put into doubt 75 basis points. 50 is a given. Maybe 75. One day of a report between now and the meeting in September. What if you get a revision? Too many things on the table. 50, yep. 75, maybe. Does it take the Fed off target the rest of the year? Absolutely. Excuse me, I didn't mean to do that. Absolutely not. What it does for the Fed is it just keeps the Fed saying, okay, if I don't go 50, 75s, I'll go 50s, but I'm getting to where I'm going and I'm going to quash inflation. That isn't going to change. That's the headwind that will hurt the stock market. But let's get back in the thing because we're doing the metals. Let's go to the metals and see what they're capable of doing. Gold's continuing to try to get its trajectory up to the 18-week moving average of closes. You're up 1.28%. It's not a stellar run, and it shouldn't be. Why would it be when you got this big headwind of the Fed going to keep raising interest rates, which in theory gives other assets that pay something an argument against gold? That's one thing. When you look at the daily bar chart, we've come up and you're finally breaking back a little bit. The pattern is higher low, higher high. To prove this market's not good, you got to get under 1780.20. There's 2 elements. I'll show you the other one. Major support is still the 18-day moving average of closes, but to get there, you break through that low. That would do too much damage in the chart. And the Bollinger Band, well, you hit it back here, you're running, but you're not hitting it, but you're keeping the embedded reading. So here's what I think is going to happen. I think this break will be bought by the pros. I think they bail if the red line closes under 79. And we'll see if the market can clear the highs of today. If it can't, that'll be a problem number for the market. When I look at the gold-silver ratio, it keeps falling where silver's a bit stronger than gold. It too is embedded. I think this market's getting bought probably right now in this break of about 20 cents. Wouldn't surprise me to see if it can keep going to the upside. A warning sign that it's not good would be taking out today's low of 2031.5. Outside days up should not see their lows taken out for at least 48 hours, 2 trading sessions. Let's see what that is. If it does happen, you could start targeting down here, but obviously that's only works if you lose the embedded reading. This is still